Finance graduates from top business schools make a lot of money. And some of these guys who get into private equity or investment banking, they actually end up making more than what a management consultant at a top management consulting firm would be making. Now, as I said, these guys who get into private equity or investment banking, their fixed salary is already quite high. And on top of that, they get bonuses basis the impact that they create for the client. So in today's video, we are going to talk about different career options that you have in finance domain after completing your MBA, and how can you strengthen your profile to get into those domains. So we will talk about corporate finance, we are going to talk about private equity, we are going to talk about investment banking. Now let's start with what is finance. So finance is basically, if I go by the definition that is available on Google, then finance is management of money. Now whether you look at lending, borrowing, budgeting, investing, forecasting, saving, everything is part of finance. Now, no matter what sector you are in, whether you are in technology, retail, logistics, e-commerce, or any other sector, corporate finance is required in pretty much every sector and every company, no matter how big or small the company is. Now, corporate finance is more about how corporations manage capital structuring, or in simple words, how do they manage companies' finances. Now, this includes management of cash flows, profit and loss, accounting decisions, investing, raising money. Now, when I talk about investing, then what vertical within the company should they invest more in? Along with this, it also includes budgeting and financial reporting to stakeholders, both internal as well as external. Now let's understand corporate finance with the help of an easy example. Suppose you and your friends start an ice cream outlet, and over a period of time it was successful, so you ended up opening multiple outlets across the city or the state that you are living in. Now because you have multiple outlets, so you have recruited, let's say, 100 plus employees to manage the business. Now, the corporate finance guy is going to be like a money manager for your business, who will keep track of how much money your ice cream outlets are making, and then how much money you are spending to ensure that you have sufficient money in your bank to pay for salaries, to pay for inventory materials, and to pay for any other expenses that you incur to run the business or to expand the business. Now, the second thing that a corporate finance professional does is to plan for the future, which means that, let's say, in future you want to open more outlets, or you want to buy state of the art machinery or the latest machinery that is available in the market, which will obviously boost your productivity and increase the efficiency. Now, to do this, the corporate finance professional will decide how to invest so that your business keeps growing. Now, the third thing that a corporate finance professional will do is raising money. Now, this is one of the very important aspects of corporate finance, because sometimes what happens is that you will need more money than you currently have to expand your business. Now, in those cases, the corporate finance professional will figure out whether to go for a loan or to sell part of your business to, let's say, investors and get money from there, or will also try to figure out if there are any other ways through which the company can generate money. Let's say there was some old machinery which we can sell, and through that we can generate some revenue or cash flow. So these are the things that a corporate finance professional decides and works on. Now, another critical thing that a corporate finance professional does is budgeting. Now, in budgeting, generally you make a budget to plan how you are going to spend on different activities. Now, these activities can be maybe opening new outlets or training your employees. So whatever cost will be incurred to train employees, or how much money you are going to spend on advertising so that you can get more revenue, more customers. Now, in the budget, you are going to cover all of these things, and you are going to figure out how much money you will spend on each of these activities. Now, one of the things that you must have seen in different businesses is they run into some sort of risks. for from time to time. Let's say there are commodity prices which have suddenly fluctuated, or let's say there is an organization which works with, let's say, different nations. So in those cases there will be currency fluctuations as well. So now the corporate finance professionals will also work on risk management. So they will identify what kind of risk the organization can face. Now these can be related to, as I said, like, commodity pricing, currency fluctuations, and then they will also find out ways to mitigate those risks. Now, the last thing that a corporate finance professional does is financial reporting, and it is super important, especially if your business involves external stakeholders like banks or other angel investors or any sort of investors. So, in financial reporting, the finance professional will generally cover things like revenues, margins, profit and loss, and the overall financial health of the company, which gives an idea to external stakeholders how well the business is currently doing. And this also helps in a way in raising money if, let's say, you need certain sort of investments to expand your business. So these kind of reports help investors make that decision to invest in your business. Now let's move to the second career option in finance called investment banking. Now, investment banks typically help companies and governments to raise money, and they also provide financial advice on mergers, acquisitions, or any other financial transactions. Now let's understand investment banking with the help of an easy example. Now, let's suppose you have a coffee shop and you want to open more outlets or more coffee shops within your city or in your country. Now, let's say for that you need $50,000. So, the investment banks will try to figure out ways to get that $50,000. So, for that, they will try and identify investors who are willing to put that money in your business. Now, against that money which you are going to borrow, the investment bank will suggest you to either sell shares of your company, which is basically selling part of your company to the investors, or they will ask you to issue bonds. Now, bonds means that you will have to repay the money that you have borrowed with an interest. Now, another possible scenario is that your business is already doing exceptionally well and you want to grow even bigger by going public, which means that you will be selling the shares of your company or part of your company to general public. Now this is also called IPO. Now the investment banks will help you raise IPO by valuing your organization or company, by completing all the necessary or relevant documents, and will also help you sell the shares of your company on the stock market. Now, another possible scenario is that, let's say, there is a tea shop near your coffee shop, and you want to either join forces with that tea shop, which will be called merger, or you may want to buy that tea shop to have both tea and coffee under one roof, in which case it will be called acquisition. Now, typically, the investment bank will advise you on whether you should go for merger or acquisition, will negotiate the deal for you, and will also ensure that the deal is smooth as well as beneficial for you. Now, a real world example of this can be Facebook, which is now called Meta. So, in 2012, when Meta wanted to go public, it worked with a lot of investment banks to raise IPO. Now, this included identifying what sort of valuation they should use when they are going public, and to complete all the relevant documentation, and then handling the selling of shares to general public. And as we all know, Meta raised billions of dollars and continued its operations and expanding its services. It also ended up acquiring companies like Instagram and WhatsApp. Now let's move to the third career option, which is private equity, which gets a lot of eyeballs and for the right reasons, because some of the MBA graduates from top business schools end up making $450,000 a year. And that's why a lot of students want to get into private equity. And in majority of the cases, they end up making more than your management consultants who are working at top management consulting firms. Now, what exactly is private equity? Let's understand this with the help of an example. Suppose you and your friends want to buy an ice cream shop which is available for sale in your neighborhood. But let's say that none of you individually have enough money to buy that ice cream shop. So what you all decide is that you will pool in some money, which means that each one of you is going to contribute certain amount so that you can together buy that ice cream shop. Now, once you have bought that ice cream shop, and because you have pooled in money, so it means that on the basis of what amount you have invested in the business or in that ice cream shop, you will get a percentage share of the ice cream shop. Now, once you have the ice cream shop, you start working on making it better and more profitable by, let's say, improving the recipe or advertising, or you may even expand the business by opening more outlets within the city, within the state you are living in, or within the country. Now, after some time, the business is really successful and you decide to sell the business at a higher price than what you purchased it initially for, which means you and all your friends will collectively make a profit out of that business because now that business is super successful. So, private equity firms also work on the similar principle, but instead of buying ice cream shops, they generally buy large companies or parts of large companies. Now, how do private equity firms get money to buy these companies? Now, the way you pulled in money from your friends, in the same way, they identify investors who are willing to invest money so that they can buy those companies. And then they work on improving the performance as well as profitability of that company. Now, once they have done that, once the company is really successful, they sell the company at a much higher price than what they initially purchased it for. Now, in this way, the private equity firms as well as the investors make profits. Now, let's look at some of the top companies in each of these domains. So, for corporate finance, as I said, every company, whether it is in technology sector, whether it is in power sector, whether it is in infrastructure, any company, any sector, no matter how large the company is, no matter how small the company is, they need corporate finance. So some of the examples can be companies like Google, Microsoft, Adobe, Salesforce, who are from technology. And then you can have companies from different sectors. Maybe from energy, you can have companies like Siemens, L&T, and then you can also have the new age companies in technology like OpenAI. So all of these companies will need corporate finance. So they hire corporate finance professionals generally from top business schools. Now, for investment banking, generally the top investment banks are like JP Morgan, Morgan Stanley, Citibank, Goldman Sachs. And for private equity, you have companies like Blackstone, CVC Capital, Bain Capital, and then you also have companies like Sequoia Capital. Now, to strengthen your profile for any of these domains so that you can get a good summer placement in one of these companies or one of these domains, and then eventually you can also get a final job in one of these domains. Now, to do that, you can take up certain online courses which I have added in description, which are going to be totally free. So these courses will help you in, like, let's say, improving your finance skills or even brushing up your finance skills. Now, I hope you liked the video, so do share it with your friends and family members, and do subscribe to our channel so that you can get regular updates around different specializations, different career paths, different programs related to higher education.